Before you study a single balance sheet or read one more Wall Street column, Peter Lynch says, look in the mirror. Chapter 4 is a reality check. Investing successfully depends less on picking the perfect stock and more on answering 3 personal questions honestly. Lynch calls this the mirror test. Question 1. Do you own a house? Lynch argues that buying a house is one of the best, lowest-stress investments most people can make. A house gives leverage. You typically put down 20% and borrow the rest. Tax deductions on mortgage interest and local property taxes. And if you hold it for years, it offers solid protection against inflation. He points out that if you buy a $100,000 house with 20% down and its value increases by 5% in a year, you are making roughly 25% on your cash invested. Houses are slow, familiar, and local. You poke around attics and basements, check schools and neighborhood trends, hire an inspector, and live with the decision. Stocks, by contrast, trade every day. People spend minutes choosing a stock, but months choosing a microwave oven. Lynch's point: if you do not yet own a house and it fits your life plan, get that foundation in place before chasing stocks. Question 2. Do you need the money? This is about time horizon and financial priorities. If you will need cash in 2 or 3 years for college tuition, a down payment, or monthly living expenses, do not put that money into stocks. Stocks can be unpredictable over short spans. Even blue-chip names can fall and stay down for years. Lynch's simple rule is this: only invest money you can afford to lose without it affecting your daily life. If a loss would cause real hardship, put the money in something safe and liquid. Question 3. Do you have the personal qualities that make a good investor? This is the hardest test. Lynch lists temperament traits that matter: patience, self-reliance, common sense, a tolerance for pain, humility, flexibility, a willingness to do independent research, and the readiness to admit mistakes. He warns that top intellectuals sometimes overthink and get tripped by market's simple, repetitive behavior. Equally important is the ability to act without perfect information. Waiting for complete clarity usually means it is too late. A big part of this chapter deals with emotion and timing. Lynch reminds readers that humans are terrible market timers. He cites evidence from investors' intelligence showing how advisors' sentiment flips at the worst times. For example, only about 15% of advisors were bearish at the end of 1972, just before a big drop, while 65% were bearish at the market bottom in 1974. Similarly, only 10% were bears before the 1977 downturn, 55% were bears at the start of the 1982 bull run, and 80% were bulls right before the crash on October 19, 1987. The lesson is clear. By the time everyone is optimistic or pessimistic, the market is often already headed the other way. Lynch also gives a useful volatility perspective. He points out that the price of an average stock tends to move about 50% in a year, so a stock at $50 might hit $60 or fall to $40 within the next 12 months. If you are the kind of buyer who buys at $50 then adds more at $60 because it is going up and then panics and sells at $40, no shelf full of how-to books will save you. Emotional discipline beats technical trickery. Practical takeaways from the mirror test. Get your house and emergency needs in order first. Housing often wins as a first investment. Do not put money into the stock market that you will need in the short term. Stocks are for long horizons. Be honest about your temperament. If you panic on drops, you will likely buy high and sell low. Work on patience, humility, and willingness to do homework. Do not try to time the market with your gut. Follow fundamentals, accept periodic losses, and stick with companies whose stories have not changed. Lynch closes with a wink. If none of this sounds like you, follow J. Paul Getty's succinct formula. Rise early, work hard, strike oil. But if you do pass the mirror test, you are in a much better position to use the tools and techniques he teaches in the later chapters.